So welcome everybody to another event of Startup Grind Barcelona. We've been doing this since February 2014, if I remember correctly. I do remember correctly. I will never forget that. We have done over 100 events already where we interview relevant entrepreneurs and investors, disruptors, inventors, and celebrities from the startup ecosystems from Barcelona and beyond. So we've had also people flying in from London, from Berlin, from Paris, from Madrid, even we've had hosted some people from the US. Over 100 monthly events, as I say, since 2014. We also hosted 3 international conferences in Barcelona. One that was called Barcelona San Francisco Summit, where we bridged the two ecosystems in light of the direct flight between Barcelona and California that started in 2017. And then 2 editions of Startup Grind Tech Conference, more centered and focused on purely technological companies and entrepreneurship around that. That being said, you all know what Startup Grind is. What sets us apart is that we've got a very distinct set of values. We believe in making friends, not contacts, in giving before taking and helping others before helping yourself. And that's why I think that we are a little bit different from other communities, but we're here to help everybody in the community. So irrespective of whether you are a VC, an accelerator, incubator, university, center of research, or a startup or whatever, we are here to help. So definitely let us know, drop if you are in dire need of help, of funding, contacts, hiring, introductions, whatever thing that we can do to help you. If we are not the right people to do it, we will connect you to the right people. Why? Because as it's the case with the speaker that we've got tonight, that I'm going to briefly introduce right now, most things happen in business via warm introductions, right? We believe in the power of recommendations and warm introductions. So, throughout these 7 years that we have been operating in the city, we do have a credibility and extensive network of contacts that they will trust us if we are able to recommend you to, venture capital in this case. Without further ado, just very, very, very brief disclosure for this event, since we will be talking about diversity and the VC landscape. Later on, we will start by talking about the how to select and pick the right VC fund for your company. We'll also be talking about diversity. But bear in mind that neither Mercè nor me are native in English. So it might well be that we fuck up and maybe we just don't use the precise word, right? Maybe we don't know anybody. I don't know. I wanted to give this full disclosure, but I know it's very, very muddy waters nowadays. So we'll try to do it with, as lightheartedly as possible and as candidly as possible. But I don't know. I'm not feeling 100% sure about this. Anyways, welcome, Mercè, to Startup Grind Barcelona. What's the best introduction on this? How are you doing?
Thanks, Alex.
You are managing partner at Microcapital, which is a global venture capital firm from Barcelona, but you operate in Madrid and London, specialize in B2B and B2B2C companies, specific set of sectors, right? My first question, and we're gonna get this out of the way right off the bat, which is, for first-time entrepreneurs, how can we explain the different kinds of venture capital firms? Because first-time entrepreneurs, they may be raising capital for the first time. They will be like, I'm going to take any kind of money, every kind of money from whatever venture capital, because they don't know any better. We don't know any better the first time we fundraise, right? How can we possibly explain this very briefly to them?
Yeah. So funds tend to be specialized. So first thing is you want a fund that is hands-on, who works with you and brings some value on the table, or if you just want to get the money and run away. So you've got different funds in that sense. That's the first question. Then when you come to being a hands-on approach, then you can look for specialized funds who know exactly on the vertical, on the technology that you're working on, which have corporate links. So there's a different set of features that they can provide. And that's a lot of homework as an entrepreneur to work before approaching any VC. So
how about, sorry, I broke you up.
No, I was going to say that actually I've been many years in working in venture. and it keeps appearing more and more funds specialized. So first, let's go back 10 years ago, probably was more generalistic approach. Right now, you can choose funds that really bring a lot of value while investing in the company.
Actually, maybe it's because there are more and more funds, there's more money, there's the access to startups and to capital has been democratized. Maybe this brings new actors to the ecosystem, and there is a direct need for specialization, right? Which is a very complicated word for me. But also there's value in the generic VCs, right? Because some VCs aren't specialized, and some of the biggest VCs, like Andreessen Horowitz or Sequoia, they're not very specialized. They're not following a vertical, right? So we're not going to be saying that ones are better than the others. But before we go into that, how about the timing? When it's the right time to go to talk to VCs? Because you really don't want to go too early. And I don't know, what's your take on this?
My take is we love hearing entrepreneurs while they are at the initial stages, and we keep following them. So I think whenever you have a good introduction, you were saying before, we believe in warm introductions. That's better. Then we can get some references of the person that is approaching us. So it's good to go early because you know that raising funds keeps a lot of time. It's the business of people, so relationships are important, and we love to keep track on what entrepreneurs keep been doing. So we love to hear entrepreneurs at the initial stage and keep following their evolution. So there's nothing wrong on that. It's easier when you decide that now is the moment that we need the financing to reconnect to that and to that VC. And so in our case, at least, we love to hear when they are at early stages and when they are investment ready, then to start working with them on that relationship.
But that brings two questions to the table. The first one is when to start a relationship with them. This is a very good point. I think that over time, VCs, they want to go earlier and earlier. They want to know them because, come on, like you're missing out on a lot of companies precisely because there's more VCs players in the market, right? So the earlier you go, the most likely that you will not be missing out on somebody that you probably wouldn't have gotten otherwise, right? But the second is when to commit to it, when to take their money, right? Because I might be biased here. I'm a business angel and have invested in several companies, and there's this trade-off between, in early stages, probably you want to go more for business angels because even though they don't add as much value, they also don't add that much overhead in terms of paperwork or complications. We're not so aggressive in terms of term sheet and valuations and whatever. But VC can bring a lot of other things like operations, structure, and context in the industry, and more investment. So, how do you calibrate this? What's your take on the distribution in early stages companies?
Yeah, for sure. You've got to work on your equity story. So, whenever you add value to the company and you think that there's an increase in value, that's probably the moment. Otherwise, if you approach too early a VC, you're going to be leaving a lot of shares to them that don't justify. So you need to. So most of the funds, we need some metrics. Again, there's a lot of homework to be done before approaching a VC because not everyone invests in the same stage or need the same metrics because it goes quite aligned on the amount that you are raising to which VC you are approaching. So if you are talking about 100,000 euros, probably a business angel or a business angel pool would be the best player, not a fund. As you say, there's a lot of paperwork and there's a lot of overheads by being invested by a VC. But probably if the amount justifies and you have demonstrated that there's initial traction in the market, initial product market fit, whatever it is, depending on the business, then that's the moment. And if you want to make a jump on your business and keep growing, and there's no other way than getting VC financing, I would suggest that that's the moment. But ideally, in an ideal world, bootstrapping will be the best and being financed by your customers. It's true that not all businesses may grow by their own sales. So that's the thing.
Correct.
It depends on the business. It depends on also on the vertical. So nothing to do on investing in IT, on investing on biotech, for sure.
How about let's take it a step back, like, because you said it's good to initiate the relationship before, like, some people say 6 months before, 1 year before, like maybe the stage before, like you want to raise Series A from Atomico, maybe you want to start talking to them while you're at seed or even like at late pre-seed, right? When's the right time to approach Necco, and how do you handle the hundreds or thousands of relationships that you might have going on?
We have a very good CRM for managing the relationships with entrepreneurs.
All right.
That's the first thing, because it may be that someone meets at the speed session some startups, and then it comes to an analyst, and then it comes to a partner. So the relationships, as we are the whole team, it may come from different sides. So we keep track on how they approach us, and we keep track on their milestones. So we keep notes on every time that we meet the entrepreneur, what they tell us in terms of where they are, what their small metrics that they may have, and what their objectives and their goals for that year. So if they keep, even there's some companies that send a lot of mails on their updates on what they've been doing. So that's a great thing, because we keep track on all those things. So we may see their evolution, the milestones, if they fulfill what they were saying to us, and that's part of our due diligence as well. So if they just keep doing what they've already announced at some point, for us, it's already a signal that the company has a good evolution before starting our analysis for our specific stage. That for Necco, we invest really at late seed. So probably approaching us while you are at seed, just after closing a seed round, that would be a great starting point, because we invest pre-Series A and then follow on Series A.
And which begs the question that actually, I think that a lot of companies in which I haven't invested as a business angel, right? But they keep sending me the updates as if I had invested, right? Mm-hmm. I think on the most part it is positive, right? Because I think it's good and makes me reconsider. Maybe I missed out. Maybe it's like, oh wow, they are politely consistent and persistent. And I might be getting to see how they operate, how they reason, how they evolve, and how they progress. And on a couple of occasions, I'm like, oh, fuck, like I missed out on this once. How do you...
Anti-portfolio companies.
Yeah, of course. And I do have a couple of really, really obvious ones. But there are two kinds of companies. The ones that you regret not having invested in, like, and you still keep the relationship with them, which I guess is, a big part of the ones you get. But ones that you really don't want to hear about, right? How do you politely close these relationships? Because I'm just like, I'm never going to invest in this company. I'm never going to invest in this.
I think you can read in many posts on that, because VCs were really polite, and it's difficult to hear a no. It's always like a no, because it's kind of like flirting at some point. So it's not of you, it's a question of me. It's not the right for the fun. You're not at the right stage. So it's like flirting. At the end, it's quite similar to its relationship as well. Sometimes it's difficult. We try to be clear. We try to give feedback, specific feedback on why it doesn't fit. There's something that is really clear. So as you said initially, invest in specific verticals. So anything that is out of those verticals, that's pretty clear that we cannot do anything. We can recommend other VCs. That's as much as you may get from us. In those cases where it's a question of stage, it's a question probably on the amount that you're raising. So we can be pretty clear on that. The only problem is when it's relation to the team. So whenever we don't believe that team is able to execute, that's pretty difficult to say, being polite. And sometimes because it's not objectives. It can be even something really subjective on your feeling with that person. We see many entrepreneurs, and probably you just get a sense on who is able to execute, probably which is the passion, their vision. So something that you cannot express by saying something like you don't fulfill this metric. So those are the more difficult to give this feedback and say no and stop in the relationship.
Yeah, because sometimes I don't know about you, but like sometimes I receive atrocious pitch decks, right? And sometimes it's like, oh, the call is really bad, or like they never show up, or it's like a dodgy business, or they're scamming you because like their P&L is not, it's not well formulated, like the numbers don't add up and things like that. But I don't know to what extent do you share the feedback? How do you calibrate what kind of feedback? Like, so you're erring on the polite side, or do you go for the blunt and like, look, this is not gonna work
We
because
try
of
and we try to be polite. We try to give as much feedback as possible, but that's true that we receive a lot of projects, and at some point, if we are in a concrete deal, we may be skipping a lot of deal flow opportunities that come to our inbox, so that kind of the generic inbox. So people keep pushing, and sometimes, which is best, as we were saying initially, it's looking for someone through any platform that may connect you to the fund if you don't get feedback. But if we send an initial mail saying that it doesn't, we're not going to move forward with that opportunity, that's pretty difficult that we change our opinion on that. If there's no specific thing that can be objective, so it's quite, in some sense, back on saying which is the reason, then probably it's a team question.
Okay, and how about because they say, and you kind of like hinted at it, that a VC never says no, they say not now, right? Or not yet, maybe. How do you, is there any way that you advise entrepreneurs for whenever they come back, you decide, let's say startup A, you don't invest now, but they keep being politely persistent over time, they report that you might see like it's good traction, they evolve over time, you are able to reconsider. Is there any way to incentivize the VC to invest this time around by like giving them a discount on valuation, giving them better terms, whatever? What do you usually do in this case, if it ever happens?
I think best things is probably that if you've got previous investors, they connect you to the next stage. So if we're talking about some business angel, so we keep good relationships with most of the business angels, and we try. So we are quite confident on their recommendations. So that's a way. If the company has already been invested by someone, that's a good way to approach RVC, and a good way to keep to say, I think you should reconsider, and you should look at this company of my portfolio. So that's really a good way. That's true that if we see in these kind of updates that the evolution of the company is good. We've been many times approaching companies because we've seen a good evolution. So I do recommend that they just keep sending some emails, some updates, because not even for being invested, because you never know how a VC may help. At some point, we've been intros to corporates, to other funds that probably fit better than ourselves. So you can keep the relationship and at the end probably not get the investment, but get other things also out of it.
How about the another thing that you briefly hinted at it as well is that reference checks, right? You're going to talk to the previous investors, right? But in the case of VCs getting into the first round, which might be your case, first VC round, you might have to talk to the business angels perhaps, or, and in our case, sometimes it happens that we as providers, like I run a software development company, right? And sometimes VCs call me like, hey, what company is your client, or you have worked for them? What can you tell me about them, right? How important it is to keep the good relationships with your investors and everybody in the ecosystem, because a lot of people don't know that if you don't treat your providers right, I'm not saying like we're mafia, we're bullying people here, but it's true. We can also give our opinion, right? And whether you're good at spending money, or whether you're good at hiring, or whether your strategies are that, or like you have a lot of employee turnover. I don't know. What's your take on this?
I never thought about providers, but we do check customers. So
right.
now, since we invest in B2B companies, and
that's a good point.
Early stage, So we consider that even though we are specific for 5 verticals, it's limited in our case. What we've built is great relationships with corporates working on those fields. So what we introduce as soon as a company approaches is to talk to a corporate that may conduct a pilot, a POC, whatever it is with the company, and get their feedback. So that's industry feedback. It may be a customer or even a potential customer. And we try to see how they relate to them. So even though making an introduction and getting the feedback from a potential customer may work for a VC. In our case, being B2B. Obviously, if you work on B2C, probably I would go with them for the providers, for sure. So references are important. I would say that anyone that has a company, if you hire someone, you're going to be checking the previous employers. So that's kind of the same. Getting reference on the person that is joining. At the end, you're investing in a bunch of people. So it's getting reference on them and how they relate in any kind of business relations.
That's a good point. Never thought about asking their clients in terms of, because B2B, sorry, as you were mentioning, sometimes very big companies. And for instance, this startup is selling to Telefonica, and you might want to, it's very likely that you have a contact at Telefonica. At the same time, it's not very likely that you will have that contact at Telefonica because it's got 50,000 employees, right? Or they might not be very invested in the project, or the leaders, your contacts might not be in direct relation to this kind of project. But I think it's a really good point. Another one is like the lawyers, trying to check the lawyers that the company has got. I think it's another way of knowing or getting the temperature of the company. How about when let's talk about the differences between different kinds of VC funds. We were discussing it at the beginning. I said, okay, now there comes a time when you will have to, first of all, you got to take somebody who leads the round. What is better? Is that somebody generic, somebody more media friendly, somebody specific, somebody more, I don't know, what's your take on this?
My take is it's something that you are going to be trusting in the future. So it's a question again of getting to know VCs and seeing that person that is going to be joining your board, that is going to be joining your shareholding, is going to bring value, and they're going to be getting on well with them because it's mid-term investment, so it's quite a long time to be discussing with someone. So first thing that I would check is really how you relate to the person that is representing the fund, whatever it is. But then again, it depends on the type of business. So maybe there's in my experience, there's a lot of business where you may be having a corporate VC being the best partner. Another one, maybe a generalistic fund can be good. Another one may be a specialized one. So for sure, I wouldn't bring any value to a biotech company. In my case, I've got no idea on science. So probably a fund investing in biotech is going to be ordering health. It's going to really be better for them. When you are working on IT, it depends on the persons that are leading the VC. So you're starting to see a lot of entrepreneurs that now run their own funds. You've been interviewing some of them here in Spain. So that's if you are working in something related and they have a lot of experience on your type of business, that could be a great option if you have them leading. In other cases, a general fund may be good. What I would suggest is that there's a lot of homework to be done before, and probably getting to know their past investments and how they related to their former entrepreneurs that they had in portfolio. That's a good starting point. So that's pretty easy. And I think that the entrepreneurs love to give feedback to the other ones and they share their experience. So that could be a good way of understanding what's the role of that VC, if they help, if they bring value, if they have a great network that may be helpful for the business that you are running or not. Again, also, if you are considering national investment or something more global because you are trying to reach new markets, so that could be another thing. If you need someone more local, or if you're looking for someone that helps you on the expansion because that's network outside of Spain.
One thing you have to take into consideration when deciding between going for a global, let's say, a foreign VC versus a local one? Outside of, for instance, you might have to travel more to meet them. Maybe not now because there's a pandemic, but before that, it's like, okay, there's an extra cost to that. You will have to travel more. Maybe their technical due diligence has got, or their audits have got higher fees. Maybe keeping it local, it's cheaper. At the same time, it doesn't look like that ambitious. What's your, what's your opinion on this?
I think you have to build an equity, so a shareholding that helps you on that. So starting by local seed funds, growing to Series A, and probably when you are launching, even Series A may be for international funds, but Series B for sure, because it's the time that you are expanding to other countries.
Correct.
So that's the way. If you want to enter a new market, probably your local VC, it's not going to be helping on their network there. It's not going to be helping on even providers. So if you want to hire someone in UK, probably it's better to have a fund in the UK that helps you on identifying the best provider there. So that's what I would suggest. So it keeps aligned on your growth. So it should be aligned on your expansion plans, on the markets that you are focusing. So it doesn't make sense to have a Mexican fund if you are also only working on Europe. So it has to be coherent on your strategy.
And yeah, but one of the things that you mentioned is that there's a lot of reference checking, right? And while you, from the VC standpoint, you will reference check the startup, how can the startup reference check VCs? And more importantly, like more, let's say, more tangibly, like what kind of questions can they ask other funds or other startups about you?
So I would say first that they should check with other portfolio companies whether that fund involves, so if it takes a board seat or not, if they help on the board, if they just are an observer to the board, because there's funds that only take observer positions, if they know on strategy, on growth, so on the maybe on product, on whatever that you are looking for. So check their previous experience, and reference can be, so it's pretty easy to identify because we all publish on our websites who our portfolio companies are, and checking who is the founder, so LinkedIn or whatever the platform is, and connecting. I think that's pretty easy. So that would be a way. When we're talking about international funds, they normally check with us, with the local funds. So they normally come back to us because what is normally required by any foreign fund is that the national one leads the round, or at least kind of represents them, because relating to what we were saying, so it's not that the audit is going to be with more cost or whatever it is, because they are going to be jumping on the national fund leading the round and kind of relying on their due diligence. So,
but it's interesting. I would like to maybe have heard something about like, hey, what's the track record of the fund, right? Because I think that's also interesting. Like the VCs will be asking, hey, how can you make me money? So the startup, I think from my perspective, should also be asking you, how can you make me money, right? How can you help me to make you money? Maybe to phrase it this way. Yeah, correct. How can you help me to multiply the sale or the potential exit? How could you go about that? Like,
and even more things. I think they should also ask: Am I the first company in this fund's portfolio, or am I the last one? And it's already a portfolio that is already done, and you have already returned to your limited partners their investment, and you don't really even care on my evolution. So because it depends, or the whole portfolio has evolved not so well, and you are putting all your efforts on my company, and then am I the only one that it's a kind of the promise to returns? So that's also important, and having funds aligned on that sense, because normally, so funds we commit for some years, and we structure a portfolio in the four or five initial years, and then we just keep divesting. So depending on the funds moment, that's going to be also important for me.
Yeah, that's a really good point, because one of the things that we have heard, not only from entrepreneurs, but also from the fund themselves, is that, funds aren't able to be operational on all the startups, and they tend to focus over time on the best performing ones. And once they identify that your startup's not performing, it's not like they abandon you. I'm not saying this happens, because also I don't have first-hand experience myself, but a lot of people have said it in this event, right? It's like they know that you're not worth it anymore. They cannot return the money with you, so they will focus on these ones, right? How can you know what's their strategy here? But not only reference checking, because maybe they don't even put your logo on the website. So if you didn't perform that well, right? Is there any way we can find out how would you act in wartime?
That's weird. I've been working with portfolio of companies where recovering the amount invested, it's been harder than having a 4x. So that's true.
There's exceptions, of course. There's exceptions.
The other way around. So that some companies that you think that they don't need your help, you just leave them, that they just work by their own. And other teams that you see that they need more help from the fund, you can also focus more. So it depends on the funds. It depends on the moment as well. So if you have already recovered the whole fund and you just have some few companies in the portfolio that you have to divest, but you are raising the new one because normally it just keeps, probably you're going to be having less attention. That's difficult to know beforehand. Before approaching, I cannot say how I would, because that's something that probably only the funds investors know, not even the portfolio companies.
No, and I'm totally with you there. And obviously you cannot generalize and say that all VCs are like that. Not all VCs are evil. Like some VCs, they also bring a lot of value. And as a matter of fact, one of my best friend's companies, they were the losing horse in their portfolio of the fund, but the fund really helped them to get some extra funding to complete a company sale that was, they sold for pennies. But it was the fund was really involved in making that happen, because it's like, okay, maybe this will not give us any money, but it will help you, right? So, there's also good stories in this, and I hope that people would share more. But I think that eventually one of the problems that we've got in fundraising, and especially in VC, is that there's sort of a survivorship bias, and we only talk about the companies that went well. We don't talk about the companies that didn't go well and how they were handled. How was the relationship with the VCs? How was the relationship with the business angels? How was the, very rarely. And when we hear about them, it's mostly like to hear something like some bullshit like WeWork, right? Some speculation and populism and things like that. So there's a question that I wanted to ask. It comes directly from the audience. It's directly related to the fact that we were talking about how to audit the companies, how to pre-select the companies, how to screen them, right? So Christoph asked something about how do you evaluate the technology stack of the companies at Microcapital, sorry.
Yeah.
The technology, how do you audit the technology stack?
It depends on how many technology they have. So in some cases, we send the company to be reviewed by someone externally. If it's really deep tech, it's something. If it's something more on the digital side, then we rely on ourselves. So our due diligence on technology, we rely probably on their market traction, and we don't get so in depth on reviewing how the technology, so anything in the back is built. When we consider that that's crucial, when there's the IP related, so when we have to double check on their whatever it is, so we send it then outside to normally with universities, because they don't have any conflict of interest.
Right. Yeah, and from my point of view, maybe I wanted to add that because, like, as a service provider, we sometimes with my company we evaluate technology for VC firms who want to invest, but very rarely that happens before Series A, because before Series A, we sort of understand that you're working with an MVP, which, funnily enough, that MVP ends up being the final product. Like, literally, no one rewrites the MVP. You sort of, kind of like readapt it to become the final product, but very rarely it goes before that. And one of the things that maybe you can tell us a little bit more about is who pays for these audits, because it's not standardized. Sometimes it's the VC, sometimes it's the company. So how do you operate with that?
We normally tend to, so if the company doesn't get our investment finally, we're going to be paying for that. If
All
not,
right.
we normally tend to, so that's one point. So if
That's
due
good.
diligence decision is that it's not going to be invested, then we pay for the whole deal. But if the company gets the investment, what we do is work on the financing to add this budget for paying not only the whole process of investing, but also
Yeah.
all the overhead that's going to be implying having ourselves on board. So all the audit and all the things that implies having a VC.
And then the potential fixing, right? Sometimes it goes, I don't know, I'm just saying it's not standardized because we've been in all kinds of deals, and sometimes it's 50-50,
Yeah.
or is it success, the
Sometimes
VC
it's
pay.
50-50.
Yeah. Okay.
Yeah, it
Okay.
depends on the fund. It's not clear, and even if the fund itself is allowed to cover some of the cost, and it depends on the investors that we have. So it depends. If you have public funding and the funds, normally they don't allow you to pay extra costs for the investment. So it implies
All
the
right.
whole investment process. Sometimes the fund itself has private investors or more private investors than public ones, and you may have an endowment from the fund itself that it's not going to the portfolio, but it's going to pay the cost of running it.
That's a very good point. That's a very good point.
So if the managing company doesn't have this budget in the fund, that's difficult for itself to pay for it. That's when probably you end up transferring that to the portfolio companies.
And one piece of advice coming here, unsolicited piece of advice from me, is like sometimes if you can really afford it, maybe you want to have your company audited beforehand, so that when the VCs come, you already have got a paper saying like, look, this is how it is. We're already audited, so you can speed up the process, and you will have had the time to fix all these issues, right? That potentially VC will be like, oh, but you don't have the IP here, or you have too much dependence on third-party services and whatever, right? But shameless plug here, but I think it's important pointing it out. Sorry, you were saying.
Yeah, for sure. It's something that is important. So normally, I know that when companies start, they have a lot of issues to be taken care of. But financing, the legal stuff, all this
Correct.
paperwork, when a VC comes on board, we have responsibilities. It's not our funds in the case of the VC, so we are we're responding on third parties, and we have to demonstrate that there's not an issue that is going to be going to them. So that's why we introduce all this paperwork. If you already have everything really clean and you've done all your homework in that sense,
Correct.
there's going to be speeding up the whole process for sure.
Correct. Let's jump to the other topic that we wanted to cover today. I think we've given a pretty, an overview of how to select a fund, when's the right timing, what kind of fund, international, local, stage, and whatnot. Of course, we could go as specific as you want, but I think that's sufficient for now. But the other thing that we wanted to cover today, because I think it's pretty relevant to nowadays, is diversity. Because, we're talking about diversity in tech companies, and I'm probably not the most indicated person to talk about that, running a software development company which is mostly only male and white, but VCs also have suffered the same problem, right? It's traditionally a male dominant world for a start, very white, very, very white. But in your company, at least at Necco, you have published a study about at least the gender diversity, right? Can you tell us a little bit about that, and then we'll jump into very thorny and delicate questions.
Yeah, it's not really Necco. It comes because I've joined together with some other VCs from Spain.
All right.
So a bunch of us, we were discussing on these gender issues and how mainly on gender diversity. And we were discussing how we could approach, and now we were, so the whole of us with lack of time to think about some type of initiatives. And we ended up joining an association in the UK that has been working during the last 5 years in diversity issues. So obviously, UK market has nothing to do with the Spanish one. But we've done so far is starting this year with initial research and a survey among all VCs on how we are. So that's the first point. So we've seen, we've brought the same questionnaire that has been done in the UK. And we've discovered that even though we were conscious that there's a gender issue and that there's mainly male and white, it's not so far from what we see in the UK. So,
All right.
So female representation in the funds in the UK, it's in terms of partners of the fund, so anyone that takes really a decision of investment. In the UK, it's around 13%. We are at 12 in Spain, so that's practically the same. But if you come to the team members, then probably, yes, in the UK, you've got more female representation than in Spain. But also the other thing that we compare is what's the all boys club. And in that case,
tell me more about that. What's the all boys club?
All boys club, it's what really worries us, because that's managing companies which are run exclusively by male. In that case, all partners are male. In that case, it's a third in Spain and it's a third in the UK. And they've been doing the research during the last 5 years. For us, it's the first year. We were expecting that with the other initiatives that they are running, which are really focusing on this diversity, they were getting some improvement from year to year. That's not the case in this issue. They are increasing on female representation, but in terms of those companies that are only male, so probably it's a thing of changing the way they think, because probably those companies are not willing to integrate on their teams female representation. So,
but you mean, sorry,
really...
it's leadership, it's C-levels? Because obviously you're going to change the founders, right? If like the two founders of a fund, they're male, like, what are you going to do?
That's basically the fund of the companies. That's true, you can change the founders, but probably it's going to be, we haven't gone down to analyzing the history of those companies. But if you have companies with starting with like 4 partners, then you've been raising some funds. At some point, you'll have to have some new partners joining the company.
You mean like other like leadership, like C-levels, like you know, you hire a CFO eventually, right? So
C-level. So at that stage, if you take all the decision makers of the company, let's
correct,
say,
correct.
So there's a fair that actually haven't been improving.
All right.
We are introducing a program as well, which is called Future VC. That is something that's run in the UK, where some candidates that want to join the market, and I'm talking on diversity on the wide sense. So it can be also in inclusion of profiles, so people that may never be accessing venture capital because of their background, because of their studies. So trying to have more diverse profiles, so they get some training in the UK, and we're specifically training them for being in the Spanish market. And we have been recruiting some funds to integrate and having these interns during a while, so kind of being potential analysts in the future in the companies. But I'm not talking only on gender issues, so it's really diverse profiles. It can be even persons that come from arts and that never join a VC. So we believe that all different type of profiles may be good at the time of investing and can bring some different points of view on how that company, if it may be investing a good investment decision or not.
Yeah, because like right now at the first stage of this study that you have compiled, right? You only focused because you could only work to this extent about or on the gender diversity, right, or gender disparity, if you will. But you didn't go into racial diversity, right? Because as opposed to perhaps men and women, or gender, to put it widely, it's more or less the same around the world. Of course, there are countries that are like 60-40, 50-50, but I don't know if there are many countries where, you know, there's 90% men and 10% women. I don't think that happens. But the racial diversity and distribution changes wildly from country to country, right? And so it's not like you can export some kind of blueprint like, oh, in the US, we figured that you got to have like, you know, 20% of the company has to be black and 30 has to be Asian and then the rest white. That wouldn't work perhaps in Japan, right? That wouldn't work perhaps in Russia for whatever reason, or wouldn't work in African countries. So how are you going to tackle this? How are you, how more than that is like, how do the conversations around this happen with other VCs?
Yeah, but those conversations. So everyone has.
It's the elephant in the room, right? It's the elephant in the room.
So everyone has been happy to join. We've met also some particular managing companies that were already working on terms of diversity in their teams. So,
yeah,
which is surprising. So it's really good to share. But we've been tackling gender because that's important, because our motivation was to get more female entrepreneurs being funded, which is something that we're going to be tackling next year. So we started with the VCs, and we want to go and see if there's any correlation with their portfolio and the C-levels or the founders of their portfolio of companies next year, to make sure that there's no bias. So at the end, if the whole population of Spain is mainly white, so there's a specific proportion of Latin people, proportion of Black people, and you have that funded companies in Spain have the same proportion, there's going to be no correlation. But if it's not the case, then it's a problem that we want to tackle. So making sure that there's no bias, that we don't invest in those ones that are really my peers, and that really is similar to ourselves.
Yeah, because like even if statistically they might work very well, and statistics they prove they sort of kind of like confirm what you had in the past, right? But maybe you're missing out on the outlier that everybody else has overlooked and will give you the 100x return, right? Maybe nobody invested in Amazon back then because it's like you're selling fucking books and you come from Seattle and there was no VC back in Seattle, right? Or maybe this other company that comes from, I don't know, Mercado Libre, right? I think they're Argentinian, right? It's like, I'm not investing in Latin America. And then all of a sudden you've got another, this is not as big as Amazon, but it's coming up, right? So I don't know how that enters, how that conforms to the idea of VCs having to have having to rely on a huge multiplier to return your fund to your investors. Right? I don't know if the question was very clear from my end. I'm willing to rephrase if you.
Okay. If I understood you right, that's true that you look for every specific company that you invest, you look for a high multiplier. That make sure that each of them is going to be returning at least what you've invested in the company.
Yeah.
So having a diversified portfolio can come from different points of view. So it can be from being on a generalistic approach, as we were saying, and you have companies that have no correlation among them, but it can come also from entrepreneurs being really different one to each other. So that's what we want to check. So if there's an improvement when you have different stages, so kind of considering which are the common things that make the fund be better at the end and have better returns. I don't know if you were asking on.
Yeah, it was more like, no, sorry, because my question was really messed up and I was trying to phrase it accordingly while trying not to say something too stupid and avoiding stepping over the red lines, if you know what I mean. So for me, it was like, that as a VC, 1 or 2 or 3x return, it's useless because you don't cover management fees. You need to have over 5x return per startups, right? And also they need to compensate the startups that are failing, right? Or the ones that are just not performing that well. So given that you only need to invest consistently in something bigger than 5x, you can go for a conservative approach and make sure that everything is 5x, but at the same time, it's not a great return. But by doing that, you will miss out on thinking outside of the box and getting the 100x, 200x investment that you need if right? Maybe now it's a little bit clearer. Sorry about that.
Yeah, but I don't think that any fund. So it's true that we look for a specific high X, so as you were saying, to compensate costs, write-offs, and whatever it is.
Yeah.
But I don't think that we look for a specific return on a company. So as much as possible, better. What we look for is for exceptional teams that are able to execute, and that's going to be
Yeah.
that have a specific ambition. So they are really visionary on what they are doing, and they have really clear their path to the growth. I think that's true that we review the business plan, but at the end it's so you're making so at the end it's nothing it's that you've built, but it's not really a reality. So we are not talking about it's the difference between ourselves and private equity. So we have a story in the company to be able to check on the numbers, and that's the reason to invest. So for us, it's not only having a specific return, but it's more focused on the team and having the capabilities to make the company grow.
Perfect. One last difficult question, and then I'm going to go into two very short and stupid questions, right, to wrap this up. So the first one is, but how do you make sure that your investors are diverse as well? LPs. I'm talking about LPs here.
Yeah. I think we have the same problem that the startups. So if raising a financing round is raising a fund, it's a nightmare. So at the end, it's a combination of what you want. So for venture capital, most of the funds, not all, but most of the funds will rely on public investment, because those big pockets, big endowments of government are the ones that take risk at these initial stages. So you have from European level, so the European Investment Fund to the Spanish Fondico, or whatever the local autonomy program is. So that's one of our investors, and that limits at some point your strategy.
Correct.
Then on private side, it depends on the composition. Making sure that they are the good ones, that's difficult. We also take, if there's someone that is willing to invest in this type of asset class that is liquid and that has a lot of risk, that's great, come on. But what we make sure is that they are able to fulfill the commitments. So that once we have a company to invest and we go back for a capital call, they are able to commit and to put the money on board. That's what is really crucial for us.
Because you can take a look. You can take an X-ray on the composition of the team of a startup, and then now we're taking one step farther to the investors, right? How about the investors of the investors, and then the investors? We can always take it one step further. No, just to say that, for instance, one of our friend companies at Startup Grind, Vevi, which is a platform on top everything runs in terms of managing the events and the community, raised a Series C, $40 million, I don't remember right now, and they published an article with a breakdown of their investors and the diversity of their investor landscape. And it was astonishing, in a good sense, that 20% of the investors were Black. And that was the first time in history, right? So it's really cool. And I hope that just provides the first step towards a more racially or a more diverse landscape and investment. So now maybe we can leave it here on a serious note. Now we're gonna go to the last two questions that are a little bit less specific about that, but we want to hear your opinion on this. One of them is very easy. We always ask people, or we like to ask people for books. What is a book that you would recommend us that would cover something that we have spoken today, either diversity or investment landscape, VC? A good one from your end. We want genuinely organic answers, no preparation whatsoever.
Yeah, I know. Really, let me check the last one because I can't recall the name. I'm very bad at names.
All right.
Too many entrepreneurs and so many things that I'm kind of seeing the whole day, but that's true.
Is it The Secrets of Sand Hill Road or Adventure Deals? I don't know, some of the classics, perhaps?
Yeah, I love those ones. No, I was looking for another one more inspiring on, but I can't recall the name.
No worries. Swearing is more than permitted. It's mandatory on this.
Yeah, sure. So it's
Sorry.
in blank.
Go ahead. All right. So you're not recalling. Okay. So let's jump to the signature question of this event of Start Grind Barcelona, which is, Everybody has got a useless superpower. That's something that you do remarkably and exceptionally well, but it's useless as fuck. Right? So what's yours? No useful superpowers. No useful. Usefulness is not rewarded. We want something really stupid that you do every now and then. It's like, why do I do this for? How come I do it so well?
There's a lot of powers that don't help me anything on ventures.
We want to hear.
Play piano, nothing to do with ventures. I love music stuff, which helps me. I've got a record company label as well that helps me on my personal investments.
All right.
But doesn't help on ventures. So I know a lot of music and music stuff, music industry.
More on the personal side. Come on, like you can do better than this. I'm gonna give you a couple examples, right? Couple examples. Like I'm very good at knowing the lyrics of the songs I don't like, but I don't remember the lyrics of the songs I like. So when I go to karaoke, it's like, what the fuck? Or, walk away from the car 50 meters. It's like, did I lock the car? Go back and obviously it's locked. Happens every single time. That's a useless superpower.
I don't know. I've got kids. I'm super powerful on doing a lot of things. On doing a call and hearing them on the other side of sending WhatsApp and punishing them right now, and making that my face doesn't show that I'm having all this nightmare on my back. That's
right.
I've built the last year, let's say. And quite able of making them sleep at night, training great stories from mommy's side. So let's say.
Are you good at inventing stories? I'm really
good at inventing stories. Yeah.
That's pretty useful. All right, we can wrap it up here. We know family is very demanding as our businesses. We want to thank you for your time, Mercè. It's been an absolute pleasure. It's been really, really good talk. And I wish we could have had more time to go deeper into both topics because they were really fantastic. Any last words from your end, like something that you want to share with us, something our audience has got to know, something that for posterity will be on YouTube. So think about them.
No, just a final recommendation. So, wrapping up, I would say that if something's clear, that there's a lot of homework to be done for an entrepreneur, and all the best to all the audience if you're raising funds, because VCs itself, we are also entrepreneurs, and we have the terrible nightmare of raising also funds. So good luck to all of you.
Great. Just one last thing. What kind of companies should contact you now?
So anything on B2B, early stage, as you said in the initial, and working on the digital arena, specifically in fintech, insurtech, tech, mobility, and travel.
Perfect. We can wrap it up here, 7 p.m. sharp. Thank you very much for your time. Thank you to all of our audience. See you in the next event. All right. Thank you very much.